Today, the euro is trading steadily ahead of the ECB policy decision. However, the market cannot calm down after yesterday's surprises from the US economy. In addition, the next series of US inflation reports will be released on a Thursday. So, markets will try to find out clues to whether the ECB and the Federal Reserve will begin to diverge on rate cut policies this year. On Wednesday, unexpectedly strong U.S. inflation reports significantly pushed back the timing of the first rate cut for the U.S. Central Bank. Stubborn inflation combined with a strong economic growth and the healthy labor market reduces the likelihood of a rapid rate cut in the United States to almost zero. This was indirectly confirmed in the speech by Richmond Fed President Thomas Barkin. He said on Thursday that the latest inflation data looks the same as disinflation at the end of 2023, with the prices of goods falling and prices of services rising. Consumer prices have not yet reached the level required, although in the long term it's moving in the right direction, the policymaker added. Fed officials still intend to cut rates at some point during the year, minutes from the Fed's March meeting showed. However, they want more signals about a sustained slowdown in inflation. Neither yesterday's reports nor the statistics published in the United States today can definitely guarantee such confidence. By the way, after the hawkish revaluation, the Fed watch tool now signals only 2 rate cuts. Let me remind you that a few months ago, in December 2023, the number of rate cuts was 7. The hawkish outlook for the Fed's policy has moved U.S. stock indexes into the red zone, but the S&P 500's losses of around 1% came largely due to the fade in risk sentiment. Today, the index is still trading high, moving within the intraday corridor between 5,138 and 5,178 points. The rally in the U.S. stock market is unlikely to be disrupted due to the more aggressive expectations regarding the Federal Reserve's policy. The S&P 500 will be driven to current and no doubt future high by the hype surrounding artificial intelligence. As for the US dollar, huge opportunities for further growth have opened for the greenback. After a successful Wednesday and a jump in the US dollar index of more than 1%, the greenback can finally forget about the stagnation in which it has spent most of this year. There is a volatility and a new peaks ahead. On the other hand, the US dollar is expected to settle at highs on the back of elevated interest rates set by the US regulator. Therefore, analysts do not rule out an outflow of funds from carried rates into the US currency. In any case, today the US dollar traded again at its highest level since November against a basket of major currencies. At the same time, it literally surged against the euro and also spiked by 1% against the yen. The US dollar index is trading higher today towards 105.30 until the release of new statistics for the United States and the ECB policy statement. The US Producer Price Index for final demand, excluding food, energy and trade services, rose by 2.8% in March from a year ago. On a monthly basis, the PPI grew by 0.2%. Factory inflation accelerated by 2.4% in March in annual terms. Some other indicators from this survey came out at previous or slightly lower levels. In a separate report, the number of initial unemployment claims fell to 211,000, thereby indicating a strong labor market in the United States. The comparison of the United States and the European economies is a clear note in favor of the European Union. It means that in the near future the Eurozone Central Bank will have to cut rates faster than its American counterpart. As a matter of fact, any change in interest rates by the ECB would be a very big surprise for the markets. But there was no surprise. The regulator maintained interest rates in the Eurozone at record highs. At the same time, policymakers acknowledged that inflation continues to decline and that they may consider monetary easing when it approaches the target of 2%. In recent weeks, ECB policymakers have repeatedly hinted at a rate cut in June. Perhaps there is some intrigue hidden in CRISTIN LAGARD's comments. And again, no. The ECB president also believes that the central bank will begin to lower interest rates in June, and the European stock market remains stable because most market participants expected exactly this policy decision. And now investors are much more concerned about policy moves in the United States. Interestingly, the market foresees not rate cuts, but on the contrary, rate hikes. If inflation continues to rise, then the Federal Reserve may well implement this option. Due to this overseas forecast, the euro-dollar pair had a very volatile European session. Its instrument even updated the local low over last week and came close to the support level of 1.0700. However, following yesterday's slump, today the euro was trading almost stable and remained flat within the corridor of 1.0720 to 1.0760. From a technical point of view, the euro-dollar pair of course remains bearish. So, its slide to the critical support level zone of 1.0690 and 1.0694 will be more realistic. The nearest resistance is located in the area of 1.0770 and 1.0800. Oil tried to stay above the level of $90 per barrel line. However, the bullish forecast for the US dollar affected oil prices. Well, geopolitical news continues to support oil prices, preventing them from sliding down too much. Most likely, the information background will influence the oil market. If tensions in the Middle East escalate, oil prices will begin climbing towards $100 per barrel. On Thursday, futures for the benchmark Brent crude rallied by about 1%. That's buyers are still setting the tone. However, the fastest Brent growth is expected only after its price stabilizes above 92. Until then, the market is likely to trade sideways along the level of 90. Moreover, the price swings on both sides can reach up to 1.5%. You have watched the market review by InstaForex analyst for Thursday, April 11. Subscribe to InstaForex TV channel and we keep you updated on all market developments. Feel free to ask any questions and leave your comments. I'll see you online tomorrow.